Tune in at 1 p.m. on Fridays for our weekly interview with Rob Stern of Mortgage Solutions Financial. Rob has a wealth of information on the American dream of home ownership, credit repair, and refinancing. Be prepared to call in with questions at 972 988 1040. That's 972 988 1040. Rob Stern, Fridays at 1 p.m. on 1040 a.m. KGGR.
Can you hear me?
Good afternoon, everyone. I'm Tanya Hall, and we want to thank you for joining us today as we get into a wonderful conversation with none other than the best mortgage lender on the planet, Rob Stern with Mortgage Solutions Financial is here again to enlighten us on the mortgage solution world, all the things that are available for you and I, and those of you that have not bought homes. This is the man that you want to come and see if you're looking to get yourself into a home. Not only that, if you're looking to refinance, Mortgage Solutions Financial is the place for you to be. Let me welcome to the show, his show, Rob Stern. Hi, Rob.
Hello, Tanya. Thank you very much for having me today. I look forward to spending some time together.
Absolutely. Rob, let's get started as we always do. Tell everybody who you are and what all the fabulous work you do over at Mortgage Solutions Financial.
Sure. Well, my name obviously is Rob Stern. I run the lender's residential mortgage team. We are part of Mortgage Solutions. I have 32 years in the industry as far as originating purchase loans and refinance mortgage loans. A couple of things that make us very, very special and very different is that we are direct lenders and mortgage bankers. What that means is that we close our mortgage loans without any risk-based overlays. So when you come to the lender's residential mortgage team, what you're actually doing is working with the lender. You're not working with a broker or a third-party intermediary that's going to get in the middle and have to work with whatever types of overlays may be put in place artificially to keep people out of purchasing a home. Like I said, I've got 32 years in the industry. A lot of that time, actually, the vast majority of that time has been spent with community outreach, whether it was through my time with Robert Ashley and KGVN, when he was with KGGR briefly, of course, with you over at KGGR. We've done a lot of work in the community, putting people into homes that deserve to be homeowners. You know, the unfortunate thing about home ownership in just in general is that there are too many what goes on in the world of a mortgage loan. A mortgage loan is really just like a big puzzle, Tanya. And when it comes right down to it, it's all a matter of how you put the puzzle together. That's how your success is going to be judged. I'm listed with the Better Business Bureau here in the Fort Worth, Dallas area with an A+ rating. Have been for 20 plus years. No difficulties whatsoever. And clearly, our goal of doing this show is just to inform the community, help people, whether they're purchasing a home, whether their goal is to take equity out of their home. This is who I am and what I do, and I look forward to many more years together.
Absolutely. Well, let's start with someone that may be I always assume that someone has just stumbled on this show and went, oh, wow, they're talking to me. I want to buy a house. I'm tired of renting. I'd like to start the journey to having the biggest dream in America is to be a homeowner, to own a piece of property, a land. So what's the first thing I should do as a young woman or a young man or a couple that's ready to buy a house, Rob?
Great place to start. The first thing to do is to reach out to somebody you trust, somebody you have confidence in, to look at your credit and have them build a working file. In other words, create an action plan to move forward. What we would typically do would be to look at paycheck stubs, W-2s, income tax returns, and then couple that together with your credit report to see exactly what opportunities are available. If in fact there's anything that needs to be taken care of, then we would go over go over the opportunity and the specifics required to turn you into a homeowner. There are so many different programs right now that are available. Honestly, qualifying has never been easier when it comes to purchasing a home. But as you have to begin the process. I think so many of us have this fear that sort of paralyzes us from even getting started. And if
Yeah.
we allow that to happen, then we will never progress forward. I've put 23-year-old young people into homes.
Very good.
I've put 85-year-old senior citizens into homes. It really just matters. Now the interesting thing is this 85-year-old lady that I work with,
Mhm.
85 years young, it was her first home time.
Wow.
85 years old, and we finally were able to give her enough confidence to step out and purchase that first home.
Wow. Well, let me tell you, no age is, too old and no age is too young. The moment that your mind connects with your spirit that I need to do something, that's the best time for you. So
Yes,
absolutely, because Rob, I just bought a house last year at 49 and a half. And I said, I told myself and wrote out, a goal to myself that if I wasn't in a certain place, hadn't reached a certain goal, then I would go ahead and buy my home. I said, if I'm not married, I'm going to share with you, Rob. I said, if I'm not married by the time I am 50, I am going to buy a home. And so at 49 and a half, I bought a home. And it was the best thing that I could have done. And so I want to say to those of you that are listening, you're tuned into Rob Stern with Mortgage Solutions Financial. And he is the guy that you need to speak with if you're thinking about purchasing a home. Now, what about them that just want to say, well, Rob, I don't know if I'm ready to just purchase right now. Can you talk to me? Can you counsel me?
yeah, sure. And I think that's a lot of what I do actually. There are some reasons to become a homeowner. Quite literally, home ownership is not for everyone, though, Tanya. And when I say that, you have to be prepared for the responsibility of home ownership. Quite honestly, not everybody is responsible enough to
Yeah,
take on that level of commitment.
yeah,
As a homeowner, there's several benefits that you gain. Obviously, there's the significant taxable benefits that you will receive as a homeowner.
mhm,
But in addition to the taxable benefits of homeownership, there are several social benefits that you gain as a homeowner. When I say a social benefit, when you own your own home, there's nobody upstairs banging
yes,
on the floor at all hours. There's no loud music
absolutely.
coming from the downstairs neighbors. You can let your children go out in the backyard and play on their own swing set. Perhaps ride the bike to school if that's what they choose to do in relative safety. You don't have to worry specifically about the community where you live. One thing that I've seen come out of COVID, which is very interesting, is
Mhm.
that neighborhoods have begun to pull together much more tightly than prior to. It seems that the entire neighborhood has gone back to looking after the young people. The entire
Yeah,
neighborhood has gone back to looking at the comings and goings of
yeah,
automobiles and what have you. And
yeah,
and I'm very happy to see that. That's the world that's the world that I grew up in. It's the world that my parents grew up in. And obviously, generationally, there was a significant shift, but it seems like everything is starting to shift back, and I'm very happy about that. But as far as the benefits of home ownership, when you do own a home,
mhm,
quite literally, from a taxable perspective, you're able to write off all of the interest you pay on that mortgage. You're
mhm,
able to write off all of your property taxes. And when I say write it off, what we're doing is we're creating an adjusted net income. The net income is exactly what you pay your taxes on at the end of the year. So
mhm.
quite literally, as a homeowner, it's entirely possible for you to reduce your taxable exposure by $15,000 a year. And at the end of the year, that means you're going to receive back a proportionate amount of money that's associated with that adjusted income. So it's entirely possible for a homeowner to get back an extra $5,000-6,000, perhaps more, on their tax return, just because they've made that choice. They've made the decision to become a homeowner, and of course, that doesn't even touch the fact that you are building equity. You're building growth for the rest of your life. You are building an opportunity to develop and generate that generational wealth that can be handed down from one generation to another if need be.
Absolutely.
You are literally sleeping in your bank account, and I don't know of a better use of money and a better feeling, quite honest.
Yeah. Let me ask you a few questions, just some questions I've had people to ask me that, were looking to get in, and they found out that I was a first-time home buyer, and they started just kind of asking me a few questions.
Sure.
And I was like, y'all call Rob Stern over at Mortgage Solutions Financial. But let me just tell you I gave your number to a couple of people, but let me ask you this. One of the young ladies was asking me about fixed rate versus adjustable rates. And she was saying, I'm kind of confused. So explain to us what a fixed rate is, and we know, and how long is the rate fixed?
Sure. Oh, yeah. And this is actually a really great topic to go over. So a fixed rate is going to be the same interest rate on your mortgage throughout the duration of the mortgage loan, whether it's a 30-year loan or a 15-year loan or a 20-year loan. Your interest rate will never change, meaning your principal and interest payments will never change. A variable rate or an adjustable rate mortgage is actually a very scary loan right now. And the reason for that is because when you work with these adjustable rate mortgages, what you're doing is you're basically saying, at some point, I know my interest rate is going to adjust. And that adjusted interest rate is going to be tied to a margin and an index. Well, the margin and the index will vacillate depending on the economy and what goes on with your interest rates.
Yeah.
Right now, we know what's happening. Interest rates are going higher, which would lead you to believe that when that interest rate adjusts, it's going to be a higher interest rate. And so the exposure of an individual on an adjustable rate mortgage right now is huge and significant. Adjustable rate mortgages are beneficial when we see interest rates in a downward spiral.
Yeah.
Not when we know they're going up. Because it's inevitable that when that rate adjusts, you're going to have a higher interest rate, unless you choose to refinance yourself out of that mortgage loan, which just guarantees you of that additional expense. Nothing wrong with refinancing, but when you do refinance, you should be refinancing for a benefit and not because you absolutely have to.
Yeah. Yeah. Now, let me open up the phone line, Rob, for those that may have questions during the show. You're welcome to call in. Again, you're listening to Rob Stern with Mortgage Solutions Financial. And if you'd like to call into the KGGR studios to ask Rob a question, please feel free to do that. The number is 972-988-1040. Again, that's 972-988-1040. 1040. Rob, give them your contact number too, in case they say, well, I don't want to be over there. I just want to talk to Rob. Give them a contact number.
My telephone number is going to be 972-739-2350. That's 972-739-2350. I can also be reached by internet. Just go to Lenders Texas, LendersTexas.com.
Now, let me ask you, while we're waiting for callers to call in, let me go ahead and ask you about when you're first time getting a home. And I found that I was like 15, 20, 30-year mortgage. What's the difference and what's best for a first time homeowner?
So the shorter the amortization, in other words, the lower the years you finance your home for, the higher the mortgage payment. I mean, that's the easiest way to explain it. When you finance a home for 30 years, you're financing a finite amount of money, but you're spreading the payments over a 30-year duration. When you take that same amount of money, that finite amount of money that you start with, and you finance it over 20 years or 15 years, obviously your payments are going to be higher because you're paying it off quicker. Now, the reality is, I would say 95% of the mortgage loans that I see are quite literally 30-year mortgage loans. And the reason for that is because you can always pay extra towards principal and reduce your term as you progress forward. But it's absolutely impossible for you to pay less money if you put yourself into a 15-year mortgage and find that payment is uncomfortable. Now, we're in an economy where things are tightening up a tad bit. We've still got gasoline at $3.50, maybe $4 a gallon. It's still expensive when you go to the grocery store, we go to a restaurant, what have you. I would never recommend anybody put themselves into a shorter term unless they're absolutely confident they have income that is stable, consistent, and that they can easily afford the 15-year payment.
Yeah, very, very good advice, Rob, and very, very good explanations. Another thing that I would probably like to ask you is, how long does it typically take for a mortgage to go through? And can you guarantee that you will close on time? Now, let me ask you why. Because I went through the closing process, and it was one date that we were going to close. And I was like, yes, I'm going to close on this date. Can't wait. Oh, thank you, Jesus. And then they came back and said, oh, we're going to have to push the closing back this amount of time. So I want you to just explain the closing process to people a little bit, because you can be up on a high and you'd be like, oh, but I think if I would have known that that it's common for them to fluctuate on the closing date, to change it during the process, then I would have been okay. But I was like, this is when I'm going to close,
Sure.
and I want to.
Well, first, that's a real fine line there. In all fairness, I typically don't miss closing dates. You're supposed to develop a mortgage loan, develop a file, and have a predetermined closing date going into the transaction. Now, I will tell you, when you work with a home builder, that's a big rub, because home builders are notorious for pushing out closing dates. Home builders seem to think that the whole process revolves around them, and they can just do as they choose with very little acknowledgement to what they do to the borrower in the process or to the lender in the process. I've got a home builder right now who has pushed the closing out by 90 days, and they've done that on 2 different occasions, which obviously is not only upsetting to the consumer, to the borrower, but it means you have to have a brand new credit report, and you have to go back and redo a significant amount of paperwork just to make these closings happen on time. In a typical mortgage transaction, whether it's a refinance transaction or a purchase transaction, a closing date is set and predetermined. There's no reason to miss that closing date unless there may be a problem with the seller. Perhaps the sellers are going to be out of town, so you have to push the closing date. Or there is documentation that you get back that doesn't adequately support the transaction, but still, there's no excuse for somebody telling you that they can't close your loan when you expect to close it without providing you a reason behind that. And again, I think Tanya, it goes back to the industry that we're in, but it's every industry. There are good mortgage lenders, and there are not so good mortgage lenders. There are good realtors, and there's not so good realtors. There are good broadcast personalities, and there's not so good broadcast personalities. So there's 2 sides to every coin, and the reality is, I think it really all goes back to who you choose to work with, who you choose to partner with, because we are literally a team in the process. And once you develop the team that you're comfortable with, the communications process should be consistent and transparent.
Absolutely. You're listening to Rob Stern with Mortgage Solutions Financial right here on Great Gospel Radio. We invite you to call into the studio. You got a question for Rob? He'd love to answer it. It's the number to call in the studio is 972-988-1040. Again, that's 972-988-1040. If you'd like to talk to Rob off the air, he welcomes that as well. You may reach him at 972-739-2350. Well, here comes some more questions for you, Rob. I heard about such thing as mortgage discount points, and I never really got into it, but I got a little confused on it at first. So tell us what mortgage discount points are and how do they affect a loan?
Sure. So a mortgage discount point is treated the same as mortgage loan origination when it comes to disclosing a mortgage file. A mortgage discount point is typically utilized to compensate on a loan for perhaps for the risk associated with a mortgage loan, or it's also going to be used to bring the interest rate lower. Now, the thing we want our viewers, our listeners to understand is that a mortgage discount point does not equate to a point in interest. In other words, when you pay 1 point, you will typically impact your interest rate by roughly 1/4 of a percentage point. In other words, a mortgage loan is built on risk and profitability. That's how your loan is literally structured. If there is risk involved in the transaction, discount typically accompanies that risk to help offset or the discount point is going to be involved in the loan, to help offset the associated risk. Not all loans have discount points. Not all loans have origination attached to them. But quite literally, these are mechanisms that are afforded to the transaction to help mitigate interest rate in most cases and bring things to an acceptable level. Never should these points be charged without the consumer or without the borrower being made aware of exactly what's happening. As a matter of fact, there's typically a document that is disclosed to the consumer that discusses just this, or should be disclosed to the consumer, to the borrower, that discusses this. Like I said, it is not a consistent practice, but we do see it happen very often, quite usually because of the credit involved. And again, I want to go back and remind you that a lot of the work I do is with veterans. We'll do a veterans loan regardless of their credit score. Clearly, somebody with a veteran with a matter of fact, I just closed a veteran with a 505 credit score. His loan is going to have discount attached to it, whereas a veteran with a 750 credit score would not. Again, a discount loan is attached to, it can typically be attached to the risk involved.
Absolutely. Now, we have probably about 5 minutes before we close out the show, opening up the phone lines again, 972-988-1040. Rob Stern is here today on Great Gospel Radio, speaking with us from Mortgage Solutions Financial. Rob, let's talk a little bit about escrow. That can be confusing. You know, all these terminologies when you're a first-time home buyer, you're like, what? Oh my God. Yeah, you're like, what? So you really do need someone like you and Mortgage Solutions to just counsel us and tell us about it. Give us the A's and B's and C's about escrow and what it is and how it affects us, and just give us a quick tutorial.
Yep, and there's actually some misconceptions about escrow. This is a good subject. Escrow typically contains both your property taxes and your property insurance. When you escrow a mortgage loan, you are typically setting aside, with each payment you make, 1/12 of the estimated property insurance and property taxes. Now, a couple of things to consider here. When you escrow your taxes and your insurance, it is not a profit center for your mortgage company. I think a lot of people don't understand that. When we establish, as a lender, when we establish an escrow account for a borrower, for a consumer, That is not a profit opportunity for us. Rather, we are doing this as a courtesy for the consumer to help them put aside the money to pay those taxes and insurance when it becomes due at the end of the year. And that's very important, because when you miss your escrow payments, when you miss your tax and insurance payments, then you are in breach of your purchase contract, and you stand at a point where the lender can become involved, make those payments on your behalf, and take a lien against you or against your home in order to compensate for that shortage. So every FHA loan by law is required to have an escrow account, just because that escrow account makes it a much more secure loan. When you are financing using conventional methods, whether it's a Fannie Mae or a Freddie Mac loan, you can waive the right to escrow those taxes and insurance, meaning you can pay your taxes and insurance separately. However, you have to have at least 20% equity into the transaction in order to do so. And quite literally, when you choose to waive that escrow, it's not uncommon for the interest rate to go higher just because there's more risk involved. We were talking about risk just a moment ago. When a consumer chooses not to escrow taxes and insurance, the perception from the lender is that it becomes a much riskier loan. And I'll tell you, and the risk, where the risk comes from, is quite literally your local government. If you do not escrow your property taxes, and those property taxes are not paid, the municipality where you choose to live, whether it's Dallas County or Collin County or Tarrant County, wherever, has the right to come back and pursue you for those taxes and put a lien against you. Well, nobody can trump a lien of a mortgage lender except for the government. If the government comes after you, that supersedes any lien from anybody. So it's very important for the lender to take care of to take care and make sure that you're escrowing.
Yeah, absolutely. Well, we have about a minute and a half, Rob. I'm going to let you take this time to invite people to call you, give them your telephone numbers and all of your social media outlets, and just invite them to come and be a part of all the great stories over at Mortgage Solutions.
Thank you very much. And certainly, my name is Rob Stern. I'm a direct mortgage lender and a banker. As such, I close VA loans with no minimum credit score. I will close FHA loans down to a 500 minimum credit score. We also do home equity cash outs and refinances. My telephone number is 972-739-2350. That is 972-739-2350. You can find me in the office on the weekend if you need me as well. I'm here on Saturdays, available to help anytime. Again, my website would be Lenders Texas. That is LENDERS TEXAS. You can also find me on Facebook as the Lenders Residential Mortgage Team. And I just invite you to reach out to me. Let's get the process started and turn you into a homeowner.
Absolutely. Rob, thank you so much. It's always a pleasure. I always learn so much as a first-time home buyer myself. I'll be talking to you more on next Friday, as we'll be right back here with another episode with Rob Stern.
Tune in at 1 p.m. on Friday for our weekly interview with Rob Stern of Mortgage Solutions Financial. Rob has a wealth of information on the American dream of home ownership, credit repair, and refinancing. Be prepared to call in with questions at 972-988-1040. That's 972-988-1040. Rob Stern, Fridays at 1 p.m. on 1040 a.m. KGGR.
Life insurance is one of those things that just about everybody needs, but few people actually have. Hey, if you die unexpectedly without life insurance, guess what? You'll leave your family with even a bigger mess. Life insurance will help replace your family's income. It'll help cover burial expenses. Life insurance can even help pay off debt like credit cards and medical bills.
Of the New Birth Missionary Baptist Church, located at 444 West Ledbetter Drive in Dallas, Texas, where Reverend Michael D. Pryor is the pastor. Join us for our Sunday worship and weekly services are as follows. Sunday early rising Sunday school, 7:15 a.m. Early worship service, 7:50 a.m. Regular Sunday school, 9:30 a.m. Morning worship service, 10:30 a.m. and pastoral Bible teaching, 5 o'clock p.m. taught by Pastor Michael D. Pryor. Tuesday at 7 o'clock p.m. open Bible study taught by Pastor Michael D. Pryor. Noon inspirational service on Wednesday at 12 o'clock p.m. This service includes preaching, teaching, and singing. Also Wednesday at 7 o'clock p.m. pastoral Bible teaching taught by Pastor Michael D. Pryor. Each Friday on this broadcast, we honor our late founding senior pastor, Dr. George Wynn Pryor, with vintage sermons from the past. Visit our website at newbirth-dallas.org and like us on Facebook at New Birth Dallas Live. The International Sunday School lesson can also be heard every Saturday morning at 9:30 a.m., taught by Reverend Darrell Pryor, pastor of New Covenant Baptist Church in DeSoto, Texas. You are always welcome to come and be part of any and all of our services. Our motto is, there is always something good going on in New Birth, and you ought to want to be part of that something good. Today, you will hear a vintage sermon from the late Dr. George Wynn Pryor. Scripture text, 1 Corinthians chapter 15, verse 58. Topic, be steadfast.
1 Corinthians, the 15th chapter and the 58th verse. Therefore,